Hey, what's going on, everyone? This is Sam Kwak, and welcome back to our podcast, episode 33. And I'm very excited to have a very special guest here, Jay Massey, all the way from California, joining us. And I like to refer Jay as a cash flow king. And he forgot to wear his crown today, so don't worry about that, everyone. It's the morning. It's 8 a.m., so he forgot to brush up his crown. He's supposed to wear it, but so yeah, I mean, I really love Jay's story. He comes from a very interesting beginning in the real estate investing world, and I got to tell you, it's very strong story. And after you hear his story and his expertise, you'll be amazed at the possibilities, even for you guys watching that are just getting started. What could be possible for you through Jay? So Jay, thank you for coming into our podcast. We welcome you to our episode. So Jay, tell us a little bit about yourself. And I know your story, but I know a lot of my audience don't. So tell us how you got started, where you're going, where you've been, the whole nine yards.
Sure. No, I appreciate you taking the time to have me here because at the end of the day, being able to share anything with anyone is awesome. It's fun. It's exciting. And before I say anything about my story, one of the things I want to make sure that everyone hears is there's nothing that any human has done that you can't do. And I mean you, yes, you, the ones listening, because at the end of the day, you got to understand, I'm driven by it's very simple. My family likes to eat, and I want to make sure that they keep eating. There was no intention beyond that, and just to become a bigger, better version of myself. And that's really what it comes down to. So with that being said, a number of years ago, my wife, she was in a condition in which when she's pregnant, she cannot eat or drink. And it's a condition called hyperemesis. It was not good. I had a punctured lung, could not walk and talk simultaneously without fainting. We were squatting in bank-owned property. Credit score was 398. A friend said, you should become a real estate investor, which made no sense at that particular point in time. And yet we did anyway, because it was one of those few times where listening to our best ideas kind of created the situation that we were in. So what we decided to do was to not let what we didn't have stop us. And I started out as a wholesaler, then did about 200 of those transactions, learned that taxes are a thing. And then I started collecting houses. That's what I like to call it. I like collecting houses. Got bored with that. Started collecting mortgages and doing notes. Got bored with that. Then I started collecting apartment buildings. And then we moved into commercial real estate and cell phone towers. And then lo and behold, what happened is through the process, one of the people that I was teaching came to me and said, hey, have you ever considered this short-term rentals thing? And I'm like, what is it? What are you talking about? Because I'm sure this happens to you a lot, Sam. You get people who say, hey, I got a deal, let's do this together. And I've had the privilege of being on stages all across the globe, on cruise ships. I mean, tens of thousands, probably hundreds of thousands of people. And so I'm no stranger to being offered the new deal. But this, because it came from whom it came from, I actually stopped. I listened. I was like, okay, show me the numbers. And I'm like, oh, that's pretty good. And I'm like, are you sure that that's like consistent? That's every month. This is how this works. And it was one of the only times where I'm like, all right, not only do you have a good thing and you should keep doing it, I'm going to do it too. And that has since changed everything, because we've been able to do things like, I mean, just imagine if across your portfolio, if you could double your income while only increasing your operating expenses by about 5 to 10%, your net operating income kind of changes a lot. So you get a little bit excited about that.
That's awesome. Yeah. And again, your story is probably the most powerful story. And I kid you not, I listen to a lot of stories, how people get started, but I think Jay, you are the gangbusters, right? You act so hard compared to where you were. I mean, it's amazing that what you have achieved. So what we're going to talk about today, and I love how you brought up short-term rentals, because I think that's the thing right now, right? That's a trend. A lot of people are wanting to, hey, I want to get into the Airbnb stuff.
Sure.
So before we get to that, what would you say is the main question I got asked as far as Airbnb? What would you say as far as the legal aspects? I know certain towns and cities across the United States are shutting them down. There's actually a pending bill right now in the state of Illinois where Illinois is actually more open arms to saying, hey, stop shutting these down, right? So
Right.
what would you say about how do we prepare for those quote unquote shutdowns, or cities or villages turning on you and saying, nope, no more Airbnbs?
Right. So there's a couple of things.
Mm-hmm.
And you can imagine I get this question quite frequently. I feel like I should like put it on a t-shirt. So at the end of the day, what it comes down to is we let's first just not overreact.
Mm-hmm.
We're entrepreneurs. One of the things that we must learn to do is to adapt to a changing landscape.
Sure.
That is what we must do. So let's understand, just because, there's a bill or regulation or an ordinance or whatever you want to call it,
Mm-hmm.
doesn't mean the opportunity is gone. It often means it's changed. For example, when I have read whatever the ordinances are that eventually get passed, here's the basic understanding. The majority of the ordinances that I have read, that I've gone through, and I'm talking because I've had students, et cetera, all the way in places like Russia, Poland, Canada, South America, obviously the U.S., and in multiple different states. So I've had to deal with this not only for multiple different United States, but also multiple different languages. It's a very common thing.
Yeah.
The first and most important thing to look for is, what zoning does this apply to? Most of the time, when I've read these ordinances, they're not saying you can't do it. Now, the newspapers, they say banned, forbidden, and all that other stuff. But most of the time, the ordinance say, here's where you can and how we would like you to do it. And that's how how I tend to interpret them. They're usually saying you can't be in the R1 zones. That's the most common. And then, or in some cases, they'll even go so far as to draw you a map. Here's where the areas that we actually are okay with it. We just don't want it over here. There's very, very rare cases where it actually applies to, say, multifamily housing, which again tends to be the thing that I focus on.
Mm-hmm. Yeah, that's awesome. And I mean, recently, I know a good buddy of mine that the city said, sorry, no more Airbnb. And, he had to adapt. And I mean, it was very unfortunate because, he had to sacrifice some of the cash flow. But
was that a single family house?
It is. Yeah.
Yeah. Okay. And again, I totally understood.
Yeah.
The other thing I will say is the way that you limit your downside risk. Let's just pretend that you're concerned about that, but you still want to operate. Yeah. That's also one of the reasons why we've slanted towards leasing the properties versus actually owning them, because it limits your downside risk to a lease. I mean, and what we end up doing, if need be, you just move the furniture to another location.
Right. So I guess this is more of a technical question, and I was actually I wasn't thinking about this until you brought it up. So what has the landlords that you're leasing from, their reaction been as far as, hey, I'm going to lease this property, I'm going to turn it to Airbnb? What are the responses that you get generally?
Well, if I say it just the way you said it, it's like, what? No. It's not so much. They're not against Airbnb. And you got to understand the situation that they're in. And most importantly, we as investors, as entrepreneurs, we must understand that they're humans first. Meaning, if a human has a preconceived notion or some sort of prejudice, it will surface. Meaning, the news got there first. CNN, CNBC, CBS, whatever. They said whatever, and that's what formed their impressions. And their impressions were formed around a word, and that word in this case was Airbnb. So when you approach them properly, they're like, yeah, this is good. Because They have to understand what you're doing. What you're doing is completely different than where your customer is coming from. And that is a very key distinction that most people end up missing.
Yeah. Okay. So, thank you so much for the answer. Cause, that's another technicality or technical question that I thought about. But it was in the back of my mind. I really wasn't conscious about it, but, so this is a question that's coming directly from one of our audience members, who, was anticipating this. So Haley is asking a question, tenants in Airbnb. So this is looking at from the landlord's perspective.
Okay.
I'm going to quote, if they operate an Airbnb out of one of your units, what is your liability and how do you structure a lease to allow or disallow it within the unit?
Got it. Your liability as a landlord is no different. So what's really funny about this is that we've already have all of these structures in place. It's the same thing that happens, like I told you, when you have a commercial building. If you have a commercial building, the landlord leases to the company, and the company has a certain amount of liability for foot traffic and all those types of things. Just because if I have a commercial building and say I'm leasing to a quick serve restaurant, I'm not suddenly liable if their customer gets burned by some grease or something, right? And the reason for that is because the company is operating not me, but more importantly, even if I am wrapped into some sort of litigation, that's what insurance is for. And that's really what it comes down to. There's insurance specifically for what we're talking about and what we do. And you just got to make sure that your tenant has that same insurance. And that's what we tend to offer is we, first of all, make sure that the lease is in the name of an entity. And then you also get your insurance in place.
Right on. Awesome. So another quick question from one of our audience. So Jacob is asking, one of the big issues for Airbnb is that it's really not passive income. Airbnb.
Oh, no one said it was.
Yeah, Airbnb requires a lot.
Who told you that lie?
Yeah, right. Sure, a guru. But Airbnb in its nature requires a lot of attention by property owners. There's some kind of property management to manage the day-to-day hassles of operating Airbnb. And if I would add, how does that process work?
Yeah, well, how does that process work? That's a multi-day answer, to say the least. But what I will say is this: when it comes down to managing, here's what I have found: those who have been "quote unquote" sold on the passive income thing, those people just need to own the building, okay, and lease to someone who's an operator. Period. That's really what it comes down to, because there's too many things there's just too many things to stay on top of and to do. It's a completely different business. Yes, it leverages real estate. Yes, it makes you it's one of the first times that you're able to actually take cash flow and instead of having to choose deferred maintenance. So now you can have both. You can have cash flow and upkeep your building and be paying down the mortgage or any other debt service you might have. At the same time, it's a rare thing to have all of that at the same time. But to get that, you have to provide more services, and it is the hospitality business more than it is the real estate business. And you've got to know that going in. If you're not willing to do that work, then just let the income go. You cannot put this on. I mean, we've developed a system where it takes you about 90 minutes a day. And it's pretty awesome, but you have to develop and then first of all, build and develop the system, and then you have to maintain it. And I spend most of my time trying to improve upon it, make it even better, better experience for the guest, more automated for me, because now I can be anywhere in the globe and continually operate these things with ease.
Yeah. And every day I always think about this because I look at both the success stories and the stories that have failed. It always seems like the linchpin is in the relationships and the people that you know. And it seems like, of course, Jay, you have some phenomenal resources as to having the right system and processes. And of course, part of that is having the right people in your team. And, and I think a lot of people who don't necessarily have an efficient and effective team tend to say, well, real estate didn't work for me, or this Airbnb thing didn't work for me, right? Because the idea is great, but there's no people to properly run it. So, and thank you for that insight. So As we kind of wrap up this this podcast, so this is something that I've been asking to all of our guests that are coming up on our podcast. Where do you think the market's heading? Do we see an impending crash? You know, there's a recent research done. Yeah, there's a recent research done by Zillow that indicates 75% of experts are saying 2020 is the number. Some people are saying, well, the midterm election is going to break it. What would you say? Where's the market going? Where are we now? How can we anticipate the change?
So here's what it comes down to. Instead of trying to play Nostradamus and figure out when something is going to happen, what I would be doing is figuring out when something does happen, what happens to me? How can I be prepared either direction? And at the end of the day, one of the trends that I think we as real estate investors need to be paying attention to is it's a macro trend, and it's in a way from actual ownership. Landlords might want to consider that in the same way that the workplace has become hyper mobile, right? You know, people work from everywhere. They want the nomadic lifestyle. I wouldn't be too surprised if in a number of years we see people living that same way. They don't have the same amount of items that they can carry. They carry everything that they have pretty much in the backpack, and maybe they still want to and occasionally live in an apartment, and they only want a 2-month time there. And yes, in essence, what I'm saying is that I think the living, how people live, is also transitioning, meaning away from year-long leases, away from having these big commitments that prevent them from enjoying the world that they want to see. I see a lot of that happening and changing. I mean, I know some of my friends who literally said, you know what? I'm going to take my kids for the next year and we're literally going to go travel the world. That's what they do now. They've been traveling the world. You post on Instagram, all that other stuff. We have housed so many people who say, yeah, I just keep bouncing from short-term rental to short-term rental. That's literally how it is. And we as building owners, entrepreneurs, et cetera, we need to be able to adjust to whatever that is. So whether the price of something goes up or down or not, we shouldn't be betting on that in the first place. We should be looking at how is it being used in order to weather whatever storm might be there. In fact, for those that are focused on use value, you won't experience a storm at all. You'll probably end up making more money.
Wow. Yeah, that's awesome. That's a great insight. So it's pretty much, hey, don't be stuck under the cloud, be above the cloud. And I think what you just said here might challenge a lot of people's belief. I mean, for some people, they're like, wow, Earth is so flat. And what this guy's saying is Earth is round. That's insane, right? So it may
I've said crazier stuff.
Yeah, I mean, it may challenge a lot of people's belief as to where housing is going. But part of either the market changes you or you have to adapt. So I'm glad what you just said. I think it rings true to so many levels. So Jay, I want to thank you for being on. Now, before I close this out, I want to make sure that you get the spotlight. Where can my followers find you and your content? I mean, you do really well with the contents that you release. So
thank you.
Yeah.
So we're anytime you type in Cashflow Diary online, that you'll find us. But we have a podcast at cashflowdiarypodcast.com. And obviously the YouTube channel is being continually added to as well. So at the end of the day, we're just trying to create more entrepreneurs.
Awesome. So what I'll do, guys, for those who are watching, I'll go ahead and on the link description below, if you're watching this on YouTube or if you're watching this on Facebook, I'll leave it up on top in the comment section. What I'll do is I'll go ahead and paste some links that goes directly to Jay's social media website. So you can go plug right in. You don't have to Google. I know millennials, we're so lazy that we don't even want to Google. We just want to
pretty bad.
Just click on a link and get there as fast as possible, right? So Jay, I so much appreciate you for being on. Your wisdom and insight is valuable to us. I hope to have you again on a podcast in a different day. But Jay, thank you so much.
You're welcome.
Well, hello there. You made it to the end of this video. Congratulations. And that probably means that you like our video and you love what we did. So be sure, if you want to get more information, more YouTube videos from us about real estate investing, be sure to subscribe to our YouTube channel and hit the bell icon to make sure that you get notifications on our future videos about real estate investing.